The Ichimoku Cloud is one of the most misunderstood indicators in trading. You're probably making the same mistakes as 90% of traders. And that's why in this video, we'll be simplifying the indicator and we'll show you a very beginner-friendly strategy in order to profit in trading. At first glance, this indicator looks overwhelming and messy on a chart, but don't worry, because we will go over every component of the Ichimoku Cloud. We'll break it down, and by the end of this video, you'll be an expert. First, let's start with this blue line. This is the conversion line, which is also known as Tenkan-sen. This line is more sensitive to price action, and it's used to display the shorter term trend, kind of like a smaller moving average. The other line, the red line, is the baseline. This is also known as Kaiju-sen. It acts as a higher time period moving average, meaning it's less sensitive to price action and will primarily be used to display the long-term trend. The way we'll use these two lines is identical to moving average crossovers. When the conversion line crosses above the baseline, that shows you a bullish signal, and entering a long typically becomes favorable. On the flip side, if the conversion line crosses below the baseline, that means that the trend is bearish, and we can look to take short positions. Something you'll notice about this indicator is that it actually has a leading visual element to it. This is the A and B span, also known as Senku spans. Together, they form the Kumo Cloud. And this is what stands out on the Ichimoku Cloud indicator. If you've ever seen it, this is probably what you remember. This cloud can be very useful for finding directional bias, potentially long and short opportunities, but it's best at describing the greater trend of a chart. If the Ichimoku Cloud is below price, that means that the market is uptrending or bullish. While if price is below the cloud, the market can be described as trending down. You can also use it to gauge momentum of the market based on the distance between the price and the cloud. The further that price is away from the cloud, the stronger the momentum in that trend is said to be. But if the price is close to the cloud or even inside of it, it can show that the trend is losing momentum. Now, there's one more line here that we haven't identified. That's the lagging span. This is known as Chikou span. This is an optional line. I don't personally use it, but many traders do, and there's likely value just understanding what it's doing. Typically, traders will use this as a second confirmation signal. Let's say we got our first bullish signal with a crossover, with a conversion line moving above the baseline. If the lagging span is also moving upwards, then that can be a further confirmation or confluence that price is indeed in a strong uptrend. The same goes for downtrends. If the indicator is showing us bearish signals, price is below the cloud, and then the lagging span is moving down, that is further confluence of a strong downtrend. So by now you know all the different components and understand what they're used for. However, you're probably still going to make some mistakes. This indicator takes a little time to get used to. It can add a lot of noise to your chart, so I typically don't like to have additional analysis on top of it. I like to view just the Ichimoku Cloud with price when I use it. But to make it easier, we're going to disable a lot of this indicator. We're going to cut it down to just the leading span A and B, which forms the Ichimoku Cloud. Here's how you might use this to enter trades. Here we can see that the market is in an uptrend. It's trading above the cloud. It's even tested the border of the cloud as support, and buyers came in and price bounced. At one point, the market started to break down past the cloud. This is a signal that is suggesting that it shifted from a bullish environment to a more bearish one. Once we get this signal, we can wait for the market to pull back to the cloud to enter a short position at newly formed resistance. We can set our stop just above the cloud, and we can aim downward for a favorable risk to reward ratio. The same thing applies to uptrending markets. Here we can see that price has tested the cloud as support and continued to move up higher. As time passed, it retested the cloud once again. We're going to wait for more bullish price action before entering. Right here, the market has made a new higher high after it traded into the cloud. It's sitting right at the top, potentially testing it as support. We also have this previous high that can act as an additional level of support, providing confluence to our analysis. We can enter along right here, setting our stop below the recent low and aiming for our levels higher. If you found this video helpful, I ask that you subscribe to the channel, share it with another trader that might get value from it, and check out the rest of the free educational content in our playlist and channel. Thanks for watching.